So let's start off with interest rates over time. And I'm looking at this. I pulled this graph from the Fed. So over the last 10 years, we're actually pretty low compared to where we were for the first half of the last decade. Like right now, we're in line with or lower than, but
Hmm.
we're way above where we were for maybe the last 5 years. And so there's this weird sort of, I saw it in the used car market a while back. There's this weird sort of like they call it the hedonic treadmill. Like you get really used to the good stuff, but at the same time, we don't have to worry about that current uptick so much because the average has gone down over the last year. Like right, I think ABC's had a figure that Freddie Mac 30-year fixed are at 6.47 right now on average, and not like if you got one today, but just overall everybody's mortgage. And the 15-year is even lower. It's like 5.63 on those government-backed loans. What are
Sure.
y'all seeing? What are y'all seeing with that trend and how consumers are responding to it? And then I want to talk about how lenders are responding to it too.
The rates have been going up for quite some time. It was a big shock to the market. Now things seem to be normalizing a bit. Looks like we have some rate cuts and different things ahead of us that are going to help affordability. But I think that the consumer's in a tough position from a cost perspective, all the same stuff that we've talked about and people know as far as inflation and things like that. And even though rates are starting to ladder down a bit, that's really being offset by the affordability on homes, right? So homes went up considerably over the last couple years. So even at these quote unquote lower rates that we're starting to see right now, it's not really helping affordability as much as we'd like. But if the trend continues, certainly it could help. But that's really, I think, the big tailwind that we have is just home prices are still elevated, and that's impacting people's monthly payment, and that's still a big issue. So the rates would still need to come down quite a bit to match wages and affordability, and that's really one of the challenges I think we're experiencing in a lot of our branches.